You're tuned into Agriculture Today, and we start our Friday show, how we always do, with a grain market update. And as always, we're joined with K-State grain economist Dan O'Brien. Dan, thanks for joining us once again.
Thank you, Shelby.
So, talking about the grain market, starting off our conversation, as we always do, first with futures.
Yes, the futures markets for grain seem to be in kind of a holding pattern until we find out what the USDA's updated crop production, supply, demand, and price projection information will be on Tuesday. So, and frankly, that's been a source of consternation for a good amount of farmers, and that they haven't seen the volatility that they perceive is probably justified given what they have in a number of parts of the country for crops in the field. But so and to that degree, the September contract for corn closed at 470 and 3/4, but now that contract is it's almost about a week away from being going off the board. It's in its delivery period. So we're really focusing on the December corn contract, which is trading at about 486 and 1/4. And and I guess, Shelby, I would say that gracious, the type of changes and potential variance in where yield forecasts could come out on Tuesday's report, just have a lot of potential to actually change that around, to cause a lot of market volatility. And it seems that contract that's trading at about 486 and traded yesterday at 486 and 1/4 for a close, has gotten down to about 470, but has gone pretty much sideways since then. So be a lot of eyes on where the D's corn futures contract will go, and it'll hinge off of that USDA NASS report most likely, and NASS report and the WASDE report. And for soybeans, soybeans closed for November at 1359 and a half. We've had pretty good buying the last week. China's entered the market in a proactive way. It was a buyer for several days in a row, and that has been certainly welcome for the U.S. Soybean producers. So and as far as the price trend, we've generally moved it. We were at about 1405, something like that, about a week and a half ago, and now have moved down to 1359 and a half. Had been as low within the last month as about 1280 or so. So just the definition of volatility, we're kind of looking at 10-15 cent movement on corn, but we're trading in about a dollar or so price range in the last 2 weeks, dollar or more. And so just a lot of volatility, a lot of uncertainty on the soybean side. And again, setting up for that report, I know we'll talk about that more later. Just a lot of trepidation as to where soybean yields and soybean production this year will come out. And frankly, the soybean supply demand balance sheet just is more vulnerable than the corn one. And we'll talk about that later. And for, pardon me, for wheat, we've seen wheat futures, D's at 737, down about 12 cents yesterday. And it's really telling that until about, over the last 3 marketing years, we've gotten up to this 763 as the season average price in the 21-22 marketing year, jumped up to 883, are now projected to be about 750. And here we have futures trading at about 737 for the D's contract. And it seems that and the futures the futures-based and crop insurance number for next year, based off the July contract, is hanging around 740. So I think we have in mind, particularly all that as our reference point, where we had jumped to during the height of the Russia-Ukraine war worries. That was last year. We've come down off of that. These are still, historically speaking, very good wheat futures prices, but what kind of sours that for a lot of Kansas producers is that we've had such inflation in our production costs that 740 selling price isn't what it used to be in so many words. So, and I would add on in terms of cash markets, same issues, Shelby, you and I have been talking about for a good long time, and looking at new crop bids for corn versus grain sorghum. Corn bids running in most places except for Garden City, that you're looking at about 467 to 472. There are one or two bids in the Garden City area, and the cattle feeding area about 30 cents higher, one at 506. So that's telling also. Have also heard of reports of while we're waiting for harvest to occur, what we tend to see each year, some people running short before that harvest comes, and some really strong bids. But those are, quick takers, quick offer, quick take. Somebody just needs grain right now to bridge the gap. Grain sorghum bids, again, by the time you look out to December, you got corn harvest bid for in Salina at 467 in October, 491 for grain sorghum. In Hutchinson, 486 for October for corn, 536 the top bid for grain sorghum. So there's clearly some desire to get hold of, gain control of new crop grain sorghum, and people are probably looking to fill contracts and to be aggressive going into that next market year. Wheat prices for next harvest are the top numbers are about 703, and that'd be in Topeka, but most other numbers 668, 688, etc. And again, that you got the crop insurance price about 740. You see these prices, and they're honestly about $1.50 to almost $2 lower than what farmers had just seen. So our reference price, or what we think of psychologically as being pretty happy with, is what we had about within the last 12 months. Pardon me, but so these are a little bit disappointing, and compared to where we have been, they're still, for the most part, by our KSU budgets, covering direct costs of production. The land situation, machinery situation depends on whether you own it or you're renting it or paying for it or whatever. But so we have moderately profitable wheat prices, and really, I think the bigger thing with wheat right now, in terms of how much we plant this coming year, will be probably crop rotations and moisture on the one hand, and then farmers taking a good hard look at whether they feel the prices that they're seeing out in front of them in 2024 are profitable or not.
Dan, you mentioned a USDA report that's coming out next week, and have the markets kind of prepared a little bit for that report coming out and what's going to be included in it?
That's a tough question to answer, because again, in general, we've had a number of reports come out that have from private analysts that have indicated, gosh, it looks like, that the USDA's number in the August report of 175.1 is probably about 1.5 to 1.6 bushels too high. In fact, that's the average guess for corn production for the 2023, by the time it's finalized, is again 173.5, and that would take production from 15.1 billion bushels down to 15 even. If we get much lower than that, then you're getting, and pardon me, with the ending stocks figure of about 2.14. I kind of, it's sort of been the I guess an observation that with the strong record high corn planted acres this year, that we'd have to have really about 171, 172 or less of a U.S. corn yield, and 14.8 billion bushels, something like that, to really get ourselves worried about corn. So I think with that general thought in mind, that the corn futures have in essence just kind of been positioning themselves to not be vulnerable in terms of whether they're on buy sell mode, and just they're apparently waiting and seeing and assuming that that the worry that farmers have out in the field on this probably in so many words they must be thinking it's not justified, because they're not dropping, well, because we have 486 D's corn. That's why. So if that number comes in on the low side, that could cause prices to move higher. We'll be watching. On the soybean side, again, the projection that the USDA had in the August reports, 50.9 billion bushels, 50.9 bushels per acre, 4.2 billion bushels, and for 2023 production, the general kind of a conservative reduction down to 50.2 bushels per acre, 4.15 billion bushels production. To me, there's just more risk about that number. We've had awfully dry conditions, and the numbers that the USDA will be representing were those that they saw on September 1st, and 1 or 2 days either side of that. It's pretty hot and dry in some of those areas, and we'll see where it goes. The lowest bid, or pardon me, the lowest estimate was just under 50 bushels per acre. If these numbers come in and they're say 49 and a half, something like that, bushels per acre, and you get down below 4.1 billion, then that's probably the spark for quite a bit of volatility. And really would bring us to the point of having to start to think about rationing soybean usage, even at these kind of average projections. You're looking at about 200 million bushels of carryout is what the average trade expectations are for that USDA WASDE balance sheet. But so any production sharply lower than 50 bushels per acre, lower than 4.1 billion bushels, takes us down to 100 million something. Starts with a 1, and then you've got volatility. So I guess I'm not just trying to bang the drum with hyperbole as to what could happen, but there really is a lot of risk and uncertainty coming into this report, especially with the dry conditions that have hit the last couple 2-3 weeks, and so we shall see where it comes about. But it probably is judicious to think about the potential actions given what what would happen on either same yields we have or something sharply lower, because that may necessitate Kansas farmers and agribusiness people taking different steps to limit their price risk.
Dan, mentioning dry conditions, are the concerns that producers are having around those conditions valid concerns right now?
I think so. Well, for instance, in Kansas, we've got we have about 54% of our corn acreage under some type of drought. But when you go to Iowa, there's 92% of the corn acreage in some type of drought. Wisconsin, 85. Illinois, not so much. They're only about 26, but Nebraska, 74. 68% in Texas. Of course, that's not as big of a situation. Overall in the U.S., 49%. So a number of states are at a fair amount of risk. And on the soybean side, when you look at which states are most vulnerable, again, some awfully important ones. Again, Iowa, 91% of the soybean crop under some type of drought. Nebraska, 82. Wisconsin, 83. Indiana and Illinois aren't as much, and maybe that's part of what's going on. That traders they may be more centric on what they see out their window or in the vicinity, and crops in Illinois, Indiana don't look too bad, but we start heading to the west and to the north and parts of the south, and you start to see these risks. And I guess that's why we have the USDA going out into all these states and getting objective in the field measures here around September 1 to give us some hard numbers to work with.
Dan, I appreciate you joining us for this week's grain market update.
Thank you, Shelby. Take care.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now, but we'll be back with more ahead.